Warren Buffett famously said, "Be fearful when others are greedy and greedy when others are fearful." Investors should stay calm and seize opportunities when the market is down instead of panicking. It encourages patience and long-term thinking, particularly during bear markets. In this video, we are going to look at where Vistra Corp, Adicet Bio stands against other best technology stocks to buy despite the socio-economic and political issues. Those stocks were mixed in afternoon trading Tuesday after 2 consecutive days of gains as the U.S. equities market looks to continue its recovery from an extended downturn. The S&P 500 was wavering between slight gains and losses in recent trading, while the tech-heavy Nasdaq Composite added 0.2% and the Dow Jones Industrial Average slipped 0.1%. Stocks kicked off the week with big gains as investors digested news that President Trump could scale back some of the tariffs that are due to be imposed next week on U.S. trading partners. With the gains, the Dow has inched back into positive territory for 2025 as stocks recover from a month-long sell-off spurred by concerns about the potential impact of tariffs and uncertainty about the outlook for the economy. Seasons like this have made new millionaires, and now could be your time to look for opportunities at a discounted price. Here is our list of the top 3 technology stocks with huge upside potential, capable of turning $1,000 into $1 million. But first, help us get this video to 500 likes, share it to those looking for investment opportunities, and subscribe to stay updated. These will help our channel grow bigger. Thank you. Porch Group Incorporated, ticker PRCH, together with its subsidiaries, operates a vertical software and insurance platform in the United States. The company operates in home-related product and service industries, including insurance, mortgage software, title insurance software, warranty, moving services, inspection software, home repair and marketing, financial, and other software for home services companies. It also provides insurance and warranty products to protect their homes and property-related insurance, whole home, 90-day service line, and extended labor warranties under the Porch Warranty, American Home Protect, and Residential Warranty Services brands. In addition, the company offers software and services to inspection, mortgage, and title companies on a subscription and transactional basis, as well as move and post-move services. Further, it provides inspection software and services, mortgage software, moving services, mover and homeowner marketing, and measurement software for roofers. Craig-Hallum is confident in the company's potential, which stems from its strategic changes, mainly the transformation of its insurance business into a reciprocal structure. On January 7th, the company announced the completed formation of the Porch Insurance Reciprocal Exchange, PIR, and the sale of Homeowners of America Insurance Company to PIR. The U.S. software market is expected to grow at a CAGR of 7.17% over 2024 to 2030. Possessing a strong legacy of innovation and entrepreneurship, the U.S. has been categorized as a world leader in software development, housing a thriving environment of startups, software corporations, and academic institutions. With businesses using technology to fuel creativity, productivity, and competitiveness, the broader U.S. software market continues to move towards digital transformation throughout all industries. With the transaction now complete, all the insurance policies, premiums, related claims, and all the HOA assets and liabilities will be owned by PIR. Porch Group Incorporated will receive commissions and fees for providing operating and other services to PIR, which can deliver more predictable and higher-margin financial results for Porch Group Incorporated shareholders. Craig-Hallum opines that the housing market is expected to recover its momentum into 2025, which can result in significant expansion for Porch Group Incorporated software and data business. Notably, with businesses digitizing their operations, the company's software solutions for home inspectors, movers, and contractors are expected to witness higher adoption. Also, with the growth in the software industry, Porch Group Incorporated will benefit through platform scaling, expansion of customer base, and improvement in operational efficiency. Overall, PRCH made it to our list of hot technology stocks with huge upside potential. While we acknowledge the potential of PRCH as an investment, our conviction lies in the belief that some deeply undervalued AI stocks hold greater promise for delivering higher returns and doing so within a shorter time frame. Looking for entry at $5 to $7 price will be a bargain. If you're looking for a deeply undervalued AI stock that is more promising than PRCH but that trades at less than 5 times its earnings, check out the next stock on the list. Moving further to the next stock with a huge potential of upside, please like and share this video to help our channel get more visibility. Thank you. Welcome to Boston-based Adicet Bio Incorporated, ticker ACET. Develops allogeneic gamma delta T cell therapies for cancer and autoimmune diseases. Its lead candidate, ADI-001, is in a Phase 1 trial for B-cell non-Hodgkin's lymphoma and autoimmune conditions, while ADI-270 targets renal cell carcinoma and other CD70+ tumors. Wall Street analysts are bullish on ACET, making it one of the penny stocks with the biggest upside. On February 27th, Adicet Bio Incorporated announced that the FDA granted Fast Track designation to ADI-001 for systemic sclerosis, SSC, expediting its development. ADI-001, a CAR T-cell therapy targeting CD20, is also approved for lupus nephritis, LN, and systemic lupus erythematosus, SLE. The company is advancing its treatment across 6 autoimmune diseases, with LN trials underway and enrollment for SLE, SSC, myositis, and stiff person syndrome starting in Q2 2025. Mr. Shore said, "In addition, we are continuing to enroll patients in our Phase 1 trial of ADI-270 in relapsed or refractory metastatic/advanced CCRCC patients and remain on track to announce preliminary clinical data in the first half of 2025. With a strong clinical foundation and growing momentum, Adicet is well-positioned to transform treatment paradigms for patients battling autoimmune diseases and solid tumors." Looking at the financials, as of Q4 2024, Adicet Bio Incorporated R&D expenses came in at $23.3 million, compared to $24.8 million in Q3 2024, mainly due to lower manufacturing costs. Meanwhile, G&A expenses increased to $7.5 million from $6.8 million because of higher professional fees. The company reported a net loss of $28.7 million for the fourth quarter, slightly better than the $29.5 million loss in the same quarter last year, including non-cash stock-based compensation. As of December 31, 2024, cash and short-term investments rose to $176.3 million from $159.7 million, and the company expects to sustain operations through late 2026. Overall, Adicet ranks second on our list of tech stocks with huge upside potential and capable of turning $1,000 into $1 million. While we acknowledge Adicet's potential to grow, our conviction lies in the belief that this tech stocks hold greater promise for delivering higher returns and doing so within a shorter time frame. Moving on to the next stock on the list, please like and share the video to help increase its visibility. Thank you. Let's continue. Vistra Corporation, ticker VST, a leading Fortune 500 integrated retail electricity and power generation company based in Texas. Vistra is the largest competitive power generator in the U.S. with capacity of approximately 41 gigawatts. It operates through 5 segments: retail, Texas, East, West, and asset closure. The company retails electricity and natural gas to residential, commercial, and industrial customers across states in the United States and the District of Columbia. It also involved in the electricity generation, wholesale energy purchases and sales, commodity risk management, fuel production, and fuel logistics management activities. It serves approximately 5 million customers with a generation capacity of around 41,000 megawatts, featuring a portfolio of natural gas, nuclear, coal, solar, and battery energy storage facilities. It was one of the best-performing stocks in Ray Dalio's portfolio after rallying 102% in 2024. The impressive run came amid growing expectations that Vistra Corporation would be the biggest beneficiary of the growing demand for energy needed to power data centers amid the artificial intelligence revolution. That was evident as the company delivered better than expected fourth quarter and full year 2024 results, as it benefited from rising demand for its nuclear power needed to power data centers. Net income in the quarter totaled $490 million, a significant improvement from a net loss of $184 million in the same quarter in fiscal 2023. Full-year revenue increased by $4.04 billion to $17.22 billion. Amid the better-than-expected financial results, Vistra Corp also moved to strengthen its long-term prospects amid growing demand for power. It acquired 3 nuclear sites and secured about 1 million retail customers last year. Along with effectively expanding its retail division, Vistra Corporation also successfully acquired Energy Harbor, adding nuclear, retail, and renewable assets to its portfolio. Overall, VST stock ranks third on our list of best tech stocks to buy according to billionaire Ray Dalio. While we acknowledge the potential of VST as an investment, our conviction lies in the belief that AI stocks hold greater promise for delivering higher returns and doing so within a shorter time frame. If you're looking for an AI stock that is more promising than VST, but that trades at less than 5 times its earnings, check out the next video.